But here's the key. You can diversify timing, which I think is so key. It's not just about diversifying a different asset class. It's about diversifying timing. We found for the clients we work with that they want to get out and they know when it's to get out, but they're frustrated because they have these multi-million-dollar gains. In fact, I'll tell you about a deal we helped the client with. She worked for a big tech company out of San Jose, and she bought Bitcoin, and she bought it for about $50,000 over a period of time at a very, very, very low basis. Well, that valuation of 50,000 turned into 50 million worth of Bitcoin when Bitcoin was 54,000 a coin. And so at 54,000 a coin, she exited 5 million, deferred about $1.85 million of tax without moving to Puerto Rico, right? Without collateralizing the loans, which we saw the challenges with that when some of these groups just collapsed, right? Without having to put it into an IRA, while being able to diversify the wealth, invest into a startup company. In fact, part of her dream was not to build Google's dream, was to build her own dream with like a Khan Academy, online education academy with her college roommate. And so they're building this thing, and it's like fantastic and it's exciting. But she did it when 54,000 a coin, right? Now the valuation went up to 60, 65, 67, 60, I think it ended up about 69, right? And I called her every time, like, hey, you want to exit some more? Because your 45 million at this point is now grown well, surpassed that. Now she ended up not doing that, but the plan is when it comes back to do a lot of this. And so the point is, we were the first to do this with something called a deferred sales trust. Most people don't know about this. It works for any asset of any kind, as long as this has at least $1 million net proceeds, $1 million gain. We also did it with Ethereum. Another client, he worked for Ripple, right? So the XRP. And for him, he bought Ethereum. It was his and Bitcoin. Same thing. He lived in the Bay Area, and he exited over a period of time about 7.5 million during this run. And for him, it was that diversification. It was a proven tax strategy, not having to move overseas. Everything's fully reportable to the IRS. It's all there to see. And it's through this strategy called a deferred sales trust. It's kind of like a 1031 exchange. It's kind of like an IRA. It's kind of like a 401k. But it's super flexible. You can invest back into real estate, back into crypto when the market makes sense. But here's the key. You can diversify timing, which I think is so key. It's not just about diversifying a different asset class. It's about diversifying timing. And so our anticipation of the next bull market run is, since we've already proven the model, we've already had the case studies, that we'll see a massive amount of exits to diversify and to invest into real estate, and or just to wait for the crypto opportunities because of that volatility to go back and buy low, all tax deferred, right? And so that's part of why we wrote the book, Building a Capital Gains Tax Exit Plan. If anyone's interested, you can go to Amazon, hit #1 bestseller. Kevin Harrington from Shark Tank's in the book, and we had a couple others too talking about